Hey, everybody. Hey, thank you so much for joining us. Lindsay Davis here with Spartan Invest, and I'm so excited to welcome Rob Drum. He is a real estate agent and broker in the Birmingham area. Rob, tell us a little bit about yourself.
Hey, Lindsay, thank you for having me. My name is Rob Drum. I'm a real estate broker at eXp Realty here in Birmingham. I'm a real estate investor myself, and just been involved in real estate for right about 3 years here. My background is in finance, and I've got under three babies. So that's been a big part of my life, really the whole time I've been in real estate. And so I'm excited to be here, excited to kind of share some updates on our market.
Yeah, thank you. So one of the great things that Rob does is he is the data king, right? Okay, so he puts together all the information from mainly owner occupant, but a lot of investor purchases, resales in the Birmingham, Jefferson County area. And, Spartan's a very metric driven company. So honestly, I love all of the information he puts out there. He rates the buyers, the sellers in the area. And then through COVID, he's been doing weekly updates, looking at the weekly numbers on our inventory, on the market, active, under contract. Just analyzing all of it. So if you want to catch all of his videos on YouTube, what's your YouTube channel? Sorry.
Yeah, it's just Rob Drum on YouTube.
So check those out if you have time, but I'm gonna let you kind of take over and dive a little bit deeper into that. So what made you start kind of the weekly watching? I know it felt like the world was ending a little bit and we're starting to open back up. I feel like stuff's starting to get a little bit more normal, but talk a little bit about the trends that you were seeing, kind of why you wanted to start doing the weekly inventory watches, and then what you learned.
Yeah. So honestly, I read a blog at robdrum.us, and I've been doing that for about almost 3 years now also. And the reason I started doing that was really I was doing kind of numbers, data-based like research on our market, a lot around the investing space, figuring the market out. I'm just I guess I just like to figure things out. So when COVID hit, I was scared, like a lot of people were. There's kind of that one weekend, I think it was right before Trump announced like an actual shutdown, when it hit me that like, is anyone ever going to pay rent again? Is anyone going to be able to buy houses? Like my entire business, like, am I going to make any money for the next 3 months and be able to feed these 3 kids? So it was kind of like fear. And I guess what I thought was, I need to figure this out. I need to keep an eye on the market and see what's happening. And I thought, other people are going to be interested in that also. I have a lot of friends that are agents, friends that are investors, business people. And so there's kind of this just need to stay on top of it for myself and all the people, that I'm in contact with. But another thing is that I knew there was going to be opportunities, and you can see this in the videos, that I knew there were going to be opportunities to really do well coming out of this. And one of the things, I used to trade stocks for a living, and kind of one of the things about that was that anytime there was an event like this, like a high volatility, just the world's ending kind of event, that was like when we had to really be on top of our game. And that's when you would like make your year from that. And it's kind of a crazy way to think, but it's kind of ingrained in me now. So I was kind of like just scrambling, I was like, this is the time to really like potentially make your year or grow your business or whatever. So it was kind of a combination of those two things that I was just knew it was something that would be important for a lot of people.
I mean, and it has been too, because, you know, at Spartan, when everything started closing down, and like you said, it was kind of that weekend before, we're more like, you know, almost 1,200 properties under management with our property management company. Aren't any of them going to be able to pay rent? You know, it was definite panic mode, but, and, you know, so for our investors as well. So we definitely took the stance of information is key. Let's give as much information as humanly possible. So again, thank you for doing that. But, what was the biggest thing that you saw? So we're looking at almost 2.5 months, roughly. I mean, right at 2 months. But what were the trends that you saw week over week as far as what's going on in the real estate market?
Honestly, the most surprising thing is how little of an effect we've had in the Birmingham market. So one of the things I did right at the beginning of making those videos is I found a post by Zillow Research where they researched the housing market during pandemics throughout history. And then they also looked at, I think it was China recently, or maybe SARS in 2009, whatever it was that happened there. They looked at the property market prices as well as the volume of transactions. And really what they found was that transactions dropped off drastically, as much as 50% or more, but prices kind of just continued whatever they were doing before. Like they just kind of continued in that direction after. So I wasn't too worried about prices falling, and still am not, if anything, the opposite. But volume has been, we're running about 80% of last year's volume for this period since COVID started. So about a 20% decline in volume. And that's been a real surprise. I had a couple listings that they didn't have to sell for any reason. They were just ready before COVID. And I told them, like, you know, it was right when it kind of hit. I said, let's just wait and see, you know, what the market looks like, see if it is going to be fine, or, you know, there's no reason to do it right now. And we waited about maybe a week and a half, and talking to other agents, I mean, they were all saying things that, you know, listings are getting multiple offers first day, all the kind of build up of like a normal summer was out there. So I was like, okay, I guess, you know, people are still making transactions happen. Lenders are still lending. Everything's still going to kind of go forward here. So I listed them. Both of them had multiple offers. So I usually list on a Thursday. We had multiple offers, accepted one above list on Monday for both of them. So, I mean, it's just not anywhere close to my fears at the beginning of this.
Yeah, I agree. And, you know, you take Alabama rental property, their rent collected percentage, you know, where our AR number is over the last 2 months, and it is drastically different than like the national average, you know, and that has not been the same across the board in other markets. And, you know, and it's not like Alabama hasn't been affected by COVID. So I know you're a finance guy, and I know you want the data, and I love that, but what's your opinion? Why has Birmingham, or why has not, whatever, you know what I'm saying? Why Birmingham affected is what I'm trying to get out.
Yeah, well, I think we're not as urban centered. I mean, I know a lot of the properties y'all manage are not for people they're not really urban. They're kind of more of a suburban, in some cases even more rural, like than like a New York, San Francisco, Denver. So I think that kind of just the lower amount of contact we generally have, that probably played a role. I mean, the differences in leadership through our state and just the way they decided to handle things. It was really interesting. I think it was Sweden was a country that pretty much said, like, we're keeping the economy open. Like, we're going to all take precautions, but economically, we're going to keep driving because we have to keep everyone. They have kind of a welfare, I don't know if you call it a welfare economy, but socialist capitalist mixture. And they realize that they have to keep the economy rolling to keep everything paid for by their state. And so that was kind of interesting that they just took that approach. And so I think a lot of it came down to the leadership approach, where some states, some boards of realtors decided to just pretty much shut it down. And we didn't really make that decision. So that definitely helped on the real estate front.
Right. I mean, and there were some changes, but real estate, construction, everything was still deemed essential. So a lot of real estate agents really didn't skip a beat. I mean, I know on our leasing side didn't skip a beat either. We were still leasing pretty consistently. There was a great article too that we shared on our social media, and it was just about the effects of, the unemployment rates per state and how each state's local economy was negatively affected by COVID. And Alabama was ranked as like one of the least affected, just given the overall jobs that majority of Alabamians have. So that was one thing that was, I think, also beneficial in our lack of shutdown. So what predictions? I mean, you saw the trends and the week over week and how we are only 20% roughly less than 2019. Has that done anything to the market value, the prices you've seen over the last 2 months?
Well, I think we've definitely seen, as far as prices, we were running about 8 to 10% higher each month over month. So we're about to be able to get probably June 7th or so. We should be able to get pretty good numbers for May. And, I fully expect them to be 8 to 10% higher than the previous May. And and if anything, like talking to some buyers that are looking for houses now, there's a lot of people that are planning to, either now they can work from home going forward, so they want to get a bigger house with an office, or they got pregnant during quarantine, so now they need an extra room, or, there's so many things that are going to be changing as a result of this that I think are going to stimulate even more buyer demand in an already limited inventory. And just all y'all know all the good things that are happening in Birmingham as far as development. And I was telling somebody the other day that I've talked to at least 3 people in the last 6 months that moved here to start their app or start their tech startup, things like that are just kind of anecdotes, but it's something that I didn't ever really think I would hear about, as Birmingham being a hotbed for that, but I think it's turning into that.
It really is. Alabama has done a really good job of placing themselves on a very short list to attract startups, especially tech startups. I mean, look at Shift and Innovation. It's just, there's a lot of opportunities out there if you want to go down that route in Birmingham and in Alabama in general. So for, I have a lot of investors too that think that, hey, world's ending, I'm going to be able to buy at a ridiculous discount. And we have not seen that. That has not been the case as well. Like you said, we have not seen the housing prices go down drastically. The biggest thing, obviously, is the remarkably low interest rates, which I would recommend that, hey, if you're going to buy, try to take advantage of those right now, please, because they won't last forever. But yeah, the housing prices, I guess on our end, we have not seen those drastically decrease. What do you think in the future? I mean, from a just process standpoint, real estate in general, I mean, what do you think that any changes moving forward out of this?
Well, there's some things that I think Alabama is going to get their remote closing processes for a lot of closing attorneys. I'm sure that affects y'all a lot. We're excited about that. Being able to do the, what are they called, ROMs or remote closings. Hopefully we can get that done. I think things as far as like buying houses based on a walkthrough, we've got like the ability to do Matterports, which I don't know if you've seen those, but it's more or less a 3D walkthrough. And it was actually one of my clients showed me one, like you can get a free app on your iPhone that will do these Matterports now. And they'll, let you do, it's something that I haven't done for listings before, but I think I will going forward because especially if it's just free, you just set your phone on a thing. And I think people are using that kind of information and not relying as much on physically going to houses, which I think will change the market, especially like out-of-state investors being able to see things in detail without actually going is definitely going to have an effect. And even people that are moving here that may not be able to come and do showings, it's going to change some things up, I think.
Yeah, no, I completely agree. I think that there's going to be a lot of process changes, in the future with how we close the properties. Most of our closings are done remotely, anyway. But having the state just make some changes to make that a little easier is going to be really nice. I'm really excited about the notaries too. What is it? The Zoom notaries.
Yeah.
Something like that. Getting that finalized and changed. Fingers crossed. But we've seen it too on the appraisals, in that a lot of appraisers have not wanted to go into occupied properties. So do you think that may negatively affect, your price, or it could positively affect, if the appraiser can't technically walk through? What do you think about that?
Yeah, that, to be honest, I haven't seen the effect of that yet. It's kind of, we've got some appraisals coming up this week that, it depends if you're kind of pressing the limits of where a property could be valued, maybe it affects it and you have to kind of justify it a little more. I did have a client who he was doing a refi and the appraiser, I guess, pulled comps that were not very favorable. A lot of them were like foreclosures. And he's like, can you pull comps and help me, get this appraiser's mind changed? And I was like, good luck with that. Like I've never changed an appraiser's mind. I mean, I've tried a lot of times. And then he just texted me back and said, like, I told him, like, I don't think these are good comps. Like maybe these would be better. And he listened to them and changed the value. So maybe that's kind of an effect that, that appraisers will take that into account. If they can't go in, maybe you can send them pictures, or, maybe there's other ways of making sure they have a good feel of what the valuation should be and what their subject property is.
What, as far as the inventory goes, now you dove a good bit into that in your weekly breakdowns. So talk a little bit about that and kind of moving forward. I mean, a lot of home builders that I've spoken with, the larger ones, they're okay right now, but everything kind of came to a stop. So the end of the year, they're really going to feel the effects, and that may slow up inventory, which, according to your reports, is an issue right now.
Yeah, it's and that's the thing that I kind of pointed out on the video this week, was that you can see a very clear trend of the amount of active listings going down every week, and the amount of properties that are under contract going up every week for like the last 6 weeks, pretty drastically. So, and that's just kind of the definition of like tightening inventory. And and I think that's, if new home builders potentially get what I've heard them saying is that their main worry is supply chain. I don't know if y'all have had any issues with that or worried about that at all, but being able to get a lot of things come from China, and just being able to get that is their concern from what I've heard. And but we're actually building a new home right now in Lake Wilbourn, which is Signature Homes, and they've been just going nonstop building. Like, they're still working away the whole time. We signed the contract to build like a week or two before this, so I thought, like, we signed up to build a home, and then next week I'm like, do I have a job? Like, can I make any money to pay for it? So
Man,
yeah,
that's crazy timing. Right? What do you do? I don't know. I mean, it's absolutely insane. So, so for the investor, you said that you did help some investors. Obviously, that's kind of our realm. But from the investor standpoint on the single family home, what would you see moving forward as well for that? So our inventory obviously is tightening up out there. It also plays to the investor client as well. So what are your thoughts on the future of the single family rental?
well, I think one of the things I've seen is that kind of just effects on the single family market. A lot of capital is on the sidelines. So anyone that was lending hard money on renovations, they're pretty much either ridiculous terms or they're sitting it out. A lot of the hedge funds are either buying ridiculously low or sitting it out. And I don't know how long that'll last. Probably not more than a couple of months more, but that's having an effect. I'm sure, I would guess y'all are still buying properties and still going. Maybe you've seen better availability of some deals that you might not have seen before. I don't know.
I think you're pretty spot on in that it's not necessarily the number of inventory that we've seen, or the number of leads coming in to our acquisition side that we've seen take a drastic increase. It's been more or less the not as many buyers of those same properties. So we've been able to get some deals that maybe we weren't able to get prior to, because a lot of larger buyers, especially outside of the state, have stopped. And that's kind of the first instinct, especially when something like this is to stop, hoard your cash, and not make any moves until everything kind of settles. So I think that's what we saw, and I'm curious to you as well as far as how long that's going to last. It's not really sure.
Yeah, I spoke to I've been a borrower at Ground Floor a couple times, which is a hard money lender, and I asked them, and I've also referred clients there. So they said probably he said 2 or 3 months before they start easing their kind of restrictions. I mean, the terms that they were willing to lend at right now are not terms that most people would be wanting to use. So, so I think probably at least 3 months you know, maybe more. I think it probably depends on how quickly we normalize and, but honestly, like that, the price range that you guys sell at is extremely competitive, like for what y'all are, the product that y'all sell, in the like 100 to probably 140, 100, somewhere around that.
Yeah, we're like 80 to 125, somewhere, you know, that's kind of our range, but it works on the size and location, stuff like that. So
yeah, I mean, the high end of that range is like 120 is really competitive for owner occupants.
right.
And I think that's going to continue. I mean, part of it depends on lending and how lending eases back up over the next couple months. It's already started to. So, you know, I think that's only going to positively affect the single family market.
Yeah, there were so many changes. You know, we came out of '08 and there were so many changes and restrictions placed on the investor on the lending side. And, you know, curious to see, I know a lot of loans stopped and restrictions and employment verifications really tightened up on the owner occupant during this time, but we haven't really seen anything become permanent or even talk about that becoming permanent. So I would be curious to see if that has any, you know, any kind of change. There is one last question I want to ask. It's not really COVID related. So you were in stocks before, former finance, going through this now in real estate. Which would you prefer?
Well, I mean, as I was kind of hinting at before, you know, before when I was talking about why I started those videos and kind of what I was looking at, if I would have been in my old job, we would have really been, the guys I used to work with, I'm pretty confident they were just cleaning up during all the market volatility. So when I was looking at it, I was like, man, do I need to get back into this? Like, how long is this going to last? So I was like watching the stock market and kind of thinking like, this is when we would be shining and, you know, making our year in this time right here. But I would honestly I would take real estate over stocks. I own EXP shares. My wife owns 2 Apple shares, but other than that, I don't own any stocks anymore. I own some rental properties and buying more, and so that's where I'm at. That's my stance on stocks and real estate.
Just the volatility of this stock during this whole time. I mean, it's up, it's down, it's all over the board. It was really hard to, I get, you know, grasp. Obviously, that's not what I do, but you know, my husband became an expert in it overnight, and that's all he did was watch the stock, trying to time it and trying to see what's going on. But you just didn't know, you know, what the next day would bring, the next month, weeks, etc. So curious. I mean, that's just so fascinating to come from that to this, and then go through a pandemic. Man, that's kind of a roller coaster.
It is. I mean, that's life. But I think I just really, honestly, it hasn't turned out to be the roller coaster that I thought it was going to be for this whole pandemic. Like, May was going to be my most closings ever in a month, and it ended up some got moved to June. But you know, it was really a big surprise how it ended up. And I think I think we're through it. I mean, we're at least seeing light at the end of the tunnel. I went out to lunch today, which, you know, is a sign of normality.
Which is so funny. Normally that doesn't sound like that's that big of a deal, but I know what a big deal that is, you know, and it's something I haven't done yet. It's like, man, I want to go sit down at a restaurant and eat, but that's awesome. Yeah, I'm so happy that we're finally starting to come out of it a little bit. And And hopefully we can kind of stabilize the number of increased cases, you know, in the state for sure.
Yeah, there's a difference between we got Mexican takeout a lot of times over quarantine, and the first place we went when we went out to eat, I guess it was last week, was a Mexican restaurant, and my wife was like, she grabbed the chip and she's like, "This is the difference. These chips are like toasty hot out of the oven. Like you can't recreate that at home when you do takeout."
That's so true. It is so true. It's very different. And I applaud all the restaurants out there that have done such a great job doing the takeout, but man, we're excited to come back for sure.
Yeah. Oh yeah.
Thank you so much for joining us, and everybody for listening. Please go check out his videos. He does a really good job the week over week looking at the numbers and how this has affected, both positively and negatively affected, the Birmingham real estate market. And can you say your blog website again?
Yes, www.robdrum.us.
Thank you so much, Rob. I appreciate it.
Thank you for having me.
Yeah, have a good one.
Yeah, you too.
Okay, all right, bye.